Welcome back, traders. My name is Adam Harris, Chief Market Analyst, and it is Monday the 25th of March. Now, I've been away for the last 2 weeks. I did 10 days in Bali. Funny story, managed to contract Bali belly, which you should Google that. Basically was incredibly ill for about 6 of the 7 days of the event I was supposed to be there for. So I basically just went away, got really sick, and then managed to get back on the plane and come home. This is why I was unable to do a weekly analysis from Bali, which was obviously what my intention was, and unfortunately I just was not in any shape to be able to do that. So I'm back now, and let's have a look at the economic calendar. So it's Monday the 25th. I'm very glad to be back at this time and back in the UK, speaking to you today from Herne Bay in the UK. So let's have a look at the economic calendar. So really, I'm curious about the home sales. So want to see how that is. And actually, I would say as a general note, I do think that it's probably healthier to look at the actual number in comparison to the previous, because the forecast is not a real number, it's a suggested number. And really what ultimately happens is that once the actual number comes out, it's then really compared to the previous number to create a trend. What is the trend? And so I wouldn't worry about the forecast. If I had the ability to remove that, I would. But my point here is that I would go with the previous against the actual, and I'm curious to see if those numbers are growing or shrinking. It's more of a curiosity than anything crucial to keep an eye on. The next thing is really on Thursday is GDP numbers out of the UK as well as the US, I guess. But the GDP out of the UK, I want to see what's happening with that, because of course technically the UK is supposed to be in a recession, so this is an important kind of indicator to see what's going on. And then finally, when we get to the weekend, it's Easter weekend coming up for all of those of you who celebrate. And so just be aware that Friday is going to be little to no volume in the markets, although some of them might technically be open. Okay, so it doesn't really give us a lot this week that we need to be focused on or concerned about. I think it's more things that we want to be interested in, we want to pay attention to see how those numbers are looking. Okay, so that being said, let's go to the charts and have a look and see what is going on in the markets. So having a look at the VIX, kicking off with that, as you can see, price is still relatively closing still near the lows, below the main moving averages here, so there's no shift in sentiment at this time. And so the market appears relatively calm there. Let's have a look at that dollar index. Okay, so we had a very bullish last 2 weeks. Price coming down, finding support, pushing out, producing a very strong bullish candle last week, closing near the highs. And so most of this within this range. So part of this, the point of this range is that it never really quite kind of completely went up to that 105 level. And so now it looks as though it's going to attempt to do that this week. So it makes more sense to me now, especially that this downtrend is now looking more bullish, that we're potentially going to see a stronger dollar this week and therefore see that continue to push higher, which means when we go across to euro dollar, that it's going to be under a bit of pressure. What's interesting to me though is that euro dollar in its own way is not really looking that weak. It is in a downtrend, and yes, I think there is still further downside, but I'm going to be looking at this 1.08 level for support. From a monthly perspective, price is just still stuck in the middle of the range. So remember that it isn't, the dollar doesn't just trade against the euro, so it isn't just euro dollar. The dollar has a whole lot of side gigs going on. It is in commodities, obviously, and it's in US equities. Okay, so the dollar has a whole lot of other stuff going on other than, strictly speaking, just its trading against the euro. Now, we've got sterling. So sterling took a very big hit last week. It is down near levels of support. What I'm looking for now is to see at least a little bit of a correction. It's stuck within a range. As you can see here, I've sort of bounded that range. We'll see if it's going to break out of the range just yet. And from a monthly perspective, it's ping-ponging between that 50-period moving average and the 10 and 20. It's just sort of relatively range-bound. Okay, so nothing super exciting there. Not a huge amount of crystal clarity that we're waiting on it effectively for it to decide what to do. Again, here you look at Aussie dollar, did go into an uptrend, and now it's in a bit of a downtrend. Technically not a downtrend yet. We haven't broken the lows. We're just seeing it coming under a lot of pressure. So in this particular case, it's the US dollar that's putting a lot of these markets under pressure. Kiwi dollar as well, where I was looking for that to be relatively strong. That's actually broken through that. There's no doubt now that that Kiwi dollar is now looking a lot weaker, especially when you look at the monthly. You can just see a lot of, this is a very strong bearish candle here closing near those lows. So they're pressured very much to the downside there. So it makes sense to me, for example, with Kiwi dollar here to look for any kind of pullbacks, especially into that 0.600 area, looking for trend continuation shorting opportunities over there. So Very interesting, but this is definitely a characteristic of trading currencies over equities. Currencies can have very nice long sustained trends, or they can have short bursting trends. They can change direction. They can be very incredibly noisy. So they can go from ranging to attempt to start a trend, to have that trend reversed, to going back into the range again. That kind of thing is normal, which does make it tricky for currency traders, especially on the daily timeframes. So dollar yen, obviously we could see here. Now, obviously, there was a little bit of news of the Bank of Japan while I was away, and we could see that price subsequently maintain that trend. So really interesting here that I've been talking a lot about that 150 level. What's the Bank of Japan going to do? And of course, they did go and make a change. So they decided to go ahead and abandon their yield curve control as well as negative rates. And so that, interestingly enough, supported the trend. I was actually quite amazed where I was looking for that reversal. They now appear to have, the trend appears to be remaining intact. So for me, I find that intriguing. For the time being, what it does mean is that those trends for those yen crosses are likely to stay intact, which means trend traders, the yen pairs are back on the menu. All right, for looking for those with trend trading opportunities. Dollar Swissy, consolidation breakout, really nice move. So actually right now, dollar Swissy continuing to show that potential for that stronger dollar. And it's interesting here, I really want to highlight here that we had that bullish divergence, which sometimes is obvious in hindsight. It is okay if technically something shows up as obvious in hindsight. What we're doing here is continually updating our pattern recognition mechanisms in our brain. And when we identify a pattern, a potential pattern unfolding, that's great. If we identify a pattern as it completes, that's great. But also if we identify something that we missed that happened in the past, or we saw it before, we're just outlining it as well. All of those things are really, really good because all they do is ultimately reinforce that pattern recognition learning tool. So here, just confirming, for example, there was bullish divergence, and again, it was a slightly lower low. So for me, as I've been trading over the years, what's become visually more obvious is that when we get those bullish divergence, we get a very slightly lower low. So in other words, this low here is just so much lower than the previous low. Here you can see a small pullback and a big move down. Here we had a big pullback and then we did move down, but even though this was a big move in itself, when it closed, when it produced that swing low, it wasn't much lower than the previous low. And then that combined with the bullish divergence actually tells you what looks like here, ladies and gentlemen, is that Swissy trend. It looks like it's coming to an end on the monthly and weekly timeframes. So I like this because it does mean over the coming year, there's very likely to be good buying opportunities and nice uptrends on those Swissy pairs. So in that case, just one last thing on this. So again, so far, Kiwi dollar and dollar Swissy, any kind of pullbacks here for me should provide trend continuation trading opportunities. Dollar CAD, look at this, just this garbage, this mess. It's trying to break out, it's trying to trend. It's coming back up to this major level. So I would say these nearby levels here around that 1.3650 level area, is a strong area of resistance, but it's being drawn to that. If it could break through that, it might actually start to pick up and we get some solid trends. Right, let's move on to commodities. Okay. So let's look at this. There's a big move up, a pullback, another attempt at a stronger rejection. Usually in situations like this, ladies and gentlemen, this is you could call it a double top. It's not a bad thing, but it is a strong rejection that combined with bearish divergence. What that should result in is a retracement on the higher time frame or a deeper correction here. So the confirmation for that would be when we break this low over here of 21.46. We break that, we should see a correction. I would expect down to 2.1 or further. Okay, it is starting to fail at this area, at that 2000, you could call it 2200 area, but you can see the precise kind of failure is 2177. And so I'm looking to see what actually makes a lot of sense here is that April, so the candles overlap, and actually April is around the corner, which means that the April candle will be overlapping in this area over here. Sorry, let me just get that. I was looking for that to be just a normal size candle. And no, that's just not going to happen here. Just not going to be able to. I need a nice set of annotation tools. So if anyone is listening here who knows some great draw tools that I can use while I'm doing this, then I would just use those. The point is I wanted to show that the next candle will overlap, and it's very possible that we will actually tap 2100. If we do get a move down to 2100 or into this area, for me, that will be a really good buying opportunity. Okay, so looking for that to be the case. Silver again could have a really nice reaction. It's got a reaction in that 2540, 2550 area. and I would like to see a deeper retracement down towards the 24.25 area, so 24.25 into this area, and looking for that to potentially have a bit of a retracement. So we might even get a deeper pullback on silver, which I'd marked over here. We might get that pullback into those areas over the coming days and or weeks, not necessarily this week. Okay, let's go through and have a look. Let's move on to natural gas. I don't want to bore everyone here. So here we were looking for, this was actually going to be the case over here. If we did get that reversal, if we did get those, if we were going to get a bit of a nice solid bottom here, which it doesn't look like we're going to get yet, then we would see a big strong burst to the upside, and that would be the clear signal that the market is going to reverse. We don't have it at this time. Let's just do that. And the market actually just continuing to just test the bottoms. I've been talking about natural gas for the last couple of years now, and actually it has continued to just go much lower. It's, you know, I was starting to talk about it in this area here, and it's just continued to push down. So I think for this one, it's just better to wait until it does change more than anything else. Okay, crude oil. So crude oil has nicely broken out. There was a very nice kind of pullback here, push. This is a potential buy opportunity right here. Okay, there we go. So how would I do this? If I was looking for this as a trade, stop loss below the low of this candle over here, so bring it up. Low of that is 80.30, so I'd be below that, 80.29 or further. Put that stop loss below the low. I could put my entry, I've got a couple of choices. Enter on the break above this candle. So is this Monday? So this is Monday. Wait for Monday to actually or break above the high of Friday's candle, and then trailing that and looking for a 3-to-1 on that. So that's looking nice and bullish. Looks like a good continuation. Beautiful breakout and a retest. What am I looking for? I am looking for a nice little green candle in this area as a buy opportunity on crude oil to the upside. Okay, moving on to the MVPs. Okay, so I marked this 40,000 level because that was where it looked pretty much as though the market's going to go. Please note that the angle of momentum is very much changing on this. Okay, it's hard, it takes a long time, but look at the steepness over here. And for the steepness over here is starting to shift. So it is starting to lose its momentum for now. And so we'll kind of just monitor and see how it goes. I'm going to monitor that 39, 40,000 area and see if we are going to top out at that and get a bit of a deeper correction at some point. But the market is certainly starting to struggle a bit there. Okay, so just going to exercise some caution around that. The S&P, again, this trend is intact. It is starting to the momentum is starting to die. So there's no doubt that there is bearish momentum over here. But the trend is really healthy. From a price action structure, it's very healthy. So what does that mean? It means that, well, certainly you would never short the market. You shouldn't do that anyway. You wouldn't short it now. It is just simply saying that it is getting a little bit tired, and therefore what's going to happen in terms of the price action is that it's going to become a lot more choppy. It's going to become a lot more choppy. Don't be surprised if you see a move up and then a correction down, and then a move up and a correction down. So it's going to start to stumble into this area. Now, there's two ways in which the market can recoup its energy. It can consolidate. So in other words, it could start to just go and range here for a month or two, or it could have a deeper correction. I prefer deeper corrections, but they are both the same thing. Both of them give the market an opportunity to recharge its batteries. Any kind of a correction here down to that 5,000 level would be amazing. If we had a deeper pullback down below that, that would be even extra. That would 4,800 would be incredible. So right now, I'm still bullish. I'm still cautiously bullish. There might even still be a couple of 3-to-1 moves that occur before there's a bit of a correction. But just saying, the signs are there. You can see, for example, here, the NASDAQ has shifted into that consolidation mode. Okay, so this has shifted into the consolidation mode. I had marked it near the 19,000 level. It's fine. What it did was, as soon as it connected with the moving averages, it produced a bullish candle, but it is clearly battling with this 18,585 level. And we'll see if we can break through that. But we can see that has started its consolidation. The Russell here also pulling back into a little bit of a consolidation mode as well. So all of them are just taking a breather. It's not a sign of overall weakness. I just want to check, did I miss anything here? So that's the Dow. Okay, no, we spoke all about all these different things. That's all fine. Let's have a look at the FTSE. FTSE broken out. So I'm very proud of you. Well done. Again, this is an additional sign of the bullishness of the market. I want to also draw your attention to the fact that this is happening while the US indices are starting to slow down and take a bit of a breather. So why is that a good thing? It means that when everything is in lockstep with the US markets, that's either a sign of a bubble or we're in a bear market. So in other words, everything is completely hanging on every breath of the US dollar or the US economy. That's not happening right now. In other words, individual indices and individual economies, although they are generally globally all kind of going in the same direction, we're seeing individual behaviors in some of these things, which is a sign of a healthy market. That's what should happen in a very healthy market. And so the FTSE breaking out of it is also supports the idea of us being in an incredibly bullish period. I am of the opinion that we are well into the first phase one of the new bull market, that we're going to look back 10 years from now and look back and go, wow, this was kind of a bit of a golden era. But it's an interesting one because there's I have to look it up very quickly. I'll come back to you on this one. I think it was Jim Thanos who's just retired from one of his funds, and incredible investor, referring to this being the golden age of fraud, which is something that's a red flag. That is signs of a potential bubble when you have massive increases of fraud. We're not really there yet. Most of the stuff that's going on at the moment that's questionable and dodgy is the same stuff that's been going on for several years. So there isn't anything new. There isn't any new crazes that we don't know about. Cryptos are still the main major thing. I would say populism in politics is probably that's the thing you have to worry about. But other than that, I think we appear to be fine. So all the levers and cogs seem quite healthy. There aren't any major things to be worried about right now. And I'm the very first person to be able to look and see things are too good now, what's going on. But I can also at the same time recognize when things are just going just fine. So the DAX looking really good, ladies and gentlemen. Had a beautiful bit of a bump to its head against 80,000, took a small breather and just continued. Let's just appreciate that for the moment. It's hit all-time highs, gets to an all-time high, does a minor consolidation. Within a week, it's breaking on to all-time highs. Again, that is an incredible sign of bullishness. Okay, are they overextended a bit on the monthly? Yes, they're entering into that. If they had a correction now, that would be great. But they're nothing there that to me is a worrying sign. The weekly is also very, very healthy, relatively speaking. When we get a correction on the monthly, it's going to be a big one, but it's going to be a well-deserved, healthy break. It's almost as though you have a seasonal thing. You're going to just have a season of bullishness and then you'll have a season of bearishness. But because we're in a bull market, that is much shorter. And so that looks really good. Just very happy with that. Most of those, I expect them to continue to do that. The ASX here is stumbling now. So this has gone from trending very nicely to starting to stumble a bit. You can see here a nice move and then a correction, a nice bullish candle. That is a nice bullish candle. So already that is looking to continue that move to the upside. So for now, I'm cautiously bullish on this. I want to know if this is shifting from a bit of a bull mode to a bit more of a consolidation mode. We're going to have to see on that one. So I'd exercise some caution on that. But again, I'm still cautiously bullish. Why did I highlight this? Because of that pullback over there. I think I wanted to see if we had it. So we had a pullback and then we've taken off. So I think we can remove this now. We don't need that anymore. We are a little bit overextended. This is the Nikkei. It looks really good. On its way to 2000. We'll see if that's going to be the case. A little bit of bearish divergence creeping in here. But again, overall, it's had a nice pullback here. Should be able to continue up. So again, cautiously bullish on the Nikkei. Okay, so let's move on to equities of interest. Apple. Okay, so I said to you, I recall, this is 2 weeks ago. I think I said that if it was going to turn around, this is the area where it's going to do it. And actually, all I can say is that since then, it has slowed down. It is still sitting above this general upward sloping. That's not a sloping. That's not a trend line. I just drew that line in. That is just this line. Is it? Yeah, there we go. It's just a line. Okay, so no news on this. It hasn't decided which way it's going to go. It's fine. Still in that area. Amazon. Look at the consolidation here. So nice, you have big moves and then you just, every 5 candles here is a week. And we've been sitting out for 4 or 5 weeks in the same area, roughly. Okay, it's a consolidation. So what I think is happening here? Well, I think we're sitting at significant highs. Could we have a bit of a pullback? I'd be surprised. It looks like what it actually wants to do here is consolidate and then just keep going. So, and I would I would keep an eye on 200. We could see a gap up or something on that. AT&T stumbling a little bit over here, just not doing very, very well. But overall, the monthly looks okay to me. To me, I think it's just under the weight of that 50-period moving average. And look, is there a situation where, for example, price is burdened by, let's say you're a fundamental analyst and you're watching this now and you're going, that doesn't make sense to me. The price is trapped under a moving average. That's illogical. That it's just a line on a chart. How can that be the case? The fact is that there are out there people who control money, who follow technicals as well as fundamentals, and individually they are influenced by Fibonacci, pivot levels, Gartley patterns, phase of the moon, I kid you not, astrology, all kinds of crazy stuff, moving averages, there's all kinds of things. And at certain times, and this is what you need to understand. So there's 20 different things that can impact price on a chart versus just the fundamental stuff. And sometimes it's going to be that chart that day, it'll be that moving average that just happens to have the most money in that particular position in the market that happens to influence it. So what happens is you really just start to look at everything that could possibly type of influence it. It doesn't mean you subscribe to it. It just means that you're aware that other traders subscribe to it. And sometimes that person could be the person, or that series of, or that number of people, their money could be the thing that's putting pressure on it. And other times it might not even be anything technical, it could be something fundamental. So it's just more of an appreciation of what other things are. Right now, that monthly still to me looks more bullish than bearish. It's just kind of stuck where it is at the moment. ARC. Okay, so ARC is doing a little bit of a consolidation now. I think it's likely ultimately to break out of its range. It's still stuck within the range, so nothing magical there. ASML. That was meant to be, would we get a pullback? And it appears as though we did. So again, I'm going to get rid of this stuff because these things only count while I'm doing it. And it's produced a bullish candle near the moving averages. So this is basically what it's doing, is battling this 1,000 level here. Looks very much as though it wants to keep going. So again, cautiously bullish. When I say cautiously bullish, I mean that for the most part, my expectation is this is going to continue to go up. But if it becomes more sporadic or a little bit more choppy, then that's where that cautiousness is coming from, that I wouldn't be surprised, because I can see that at some point in the long future or in the medium term, in the next few months, there's going to be a bit of a deeper correction. But what I can't do right now is tell you if some weeks I can say with clarity, this is going to be a strong move. Sometimes I can say to you, look, the price is a bit twitchy. I can't actually tell you if it's going to be fine this week and then correct next week, or correct this week and then be fine next week. You can't always predict which one that's going to be. Tesco, lovely, fine. Kind of pulled back into the area and took off, and looks like it's very good. In fact, ladies and gentlemen, beautiful. When you look at it from a monthly perspective, it's a breakout, a retest, and a bullish engulfing candle. That is a very strong bullish signal. So well done, Tesco. Well done. Amex looks fine. I mean, look, immediately I go straight to the weekly and I can see it slowing down a bit. Probably we'll have a consolidation here at some point. Overall, it's healthy. It just needs a bit of a weekly retracement or consolidation into that area. So we might have that happen. So, and looking by the fact that it had a big move up and an almost immediate correction, it's going to be happening in this area. So I'm just going to mark it as a sort of a general type of area here where I expect it to stumble a little bit. Berkshire Hathaway. Okay, Berkshire Hathaway came back up, knocked its head again into this area. I'm still looking for this to have a retracement, which it did do a bit of a pullback. So it did do that. So again, I think we can get rid of this. What's interesting to me though is that it appears to be still stumbling in this area. Okay, still stumbling in that area. Had a bit of a pullback here, and we'll see if it's going to keep trying and going there. We'll see. Coca-Cola, fine, but is definitely battling with this $60-$75 area. From a monthly perspective, I think it's ultimately just going to keep going. But you can see the 4 or 5 candles here, it hasn't really gone anywhere. So it's battling, but it's trickling its way up. BP will be boosted by oil. So immediately we know BP and Exxon are going to be going up. Nothing magical about it. They're tied to crude oil, so that's going to happen. General Motors, nice pullback, consolidation, and on its way. So there's quite a few charts so far that have had weekly retracements and are continuing onwards, which means to me, if we're in a really healthy bull market, then we just stay bullish. In that particular case, I'm not going to worry about the monthly retracements just yet. But what I would say, well done GM. So just like Tesco's had an incredible breakout and retest on all-time highs, I think we can safely say that GM has broken through this level of resistance and is on its way. So well done. Bit of a clap for General Motors there. I'm not being sarcastic. I'm saying well done. That's a good sign. JP Morgan bumping this. I just marked this because here I'm expecting a bit of a pullback. That's all. Just a bit of a breather in this area. There's the 200 level. Well done for touching that. Let's see how this area copes. It doesn't deserve to be a red thing. It's not a danger zone. Excuse me. And so yeah, look, you see that be the case. Invesco, looking really good. Look at this, ladies and gentlemen. Consolidation, bullish candle. That looks ready to keep going. There's quite a few charts that look like they're going to keep going for a while. Adidas. Okay, so Adidas has broken out. I'm going to remove this range box. It's out. It's done. Very good. Well done. I consider this a breakout candle, and so far it's retesting this. So we've got a retest and a potential bullish candle here. I want to pay attention to this. This could be a trend continuation setup. Cautious a little bit with a lot of these where they're attempting to break out of a range. It might find itself coming further back into the range, but this, I think we could look back and that might end up being a potential buy opportunity. Okay, so Meta, I was looking for, why have I, oh, just because this is where I thought it might stumble a little bit. And again, this has also done a minimal pullback and now looks good to go. So we are going to see. Might just continue straight from here, but if we do get another red candle, that we know it's just trying to do a bit of a correction here. Morgan Stanley, oh, we were looking for a breakout candle here. I think we got it, guys. Look, there's that breakout move. So I'm going to get rid of this. Got it. Okay, looks as though we got that breakout. And there we go. We've had a pullback here, breakout, continuation. I think relatively safe to say Morgan Stanley is going to continue to the upside. I've got a lot of red lines in this area. That seems quite, that's probably just because it's a weekly chart and they're just weekly levels. Not that they're not that there's any significance to the color in terms of how much resistance or danger zone or anything like that. So it looks as though Morgan Stanley is on its way now to continue heading higher. Nvidia, I commented on this area because it's 1,000. Is it going to slow down a bit in this area? We still have to see. Too soon to tell. We're going to have to see. This we can get rid of. That's just annoying me. Doesn't serve any purpose anymore. And let's just see now. So now all we're doing is monitoring this area to see if it takes a bit of a breather. I need to redraw all these lines. There's just so many of these. Only reason I kept them is just such a great example of an inverse head and shoulders, that was such a beautiful, beautiful example of it, and it was such a nice, solid buy opportunity. Netflix looks fine, nice and healthy. Both the daily and the weekly looking fantastic. Netflix, super healthy. PayPal. Okay, PayPal's just trying. It's trying. It's above the 50-period moving average. We're going to see if that makes a difference. Not enough of a shift just yet. Spotify. There's your pullback. There's your bullish continuation candle, guys. I was looking for a pullback into this area, but we got a very shallow pullback and we got a bullish engulfing candle. That is a trend continuation candle. So this is another chart where it looks as though that weekly is getting ready to keep going. Spider pulling back. This is an area I'll be looking for a buy opportunity here. So what am I looking for here? I am looking for a green candle in this area, and we'll see if we get it this week. FedEx, wow, boom, gone. Okay, straight on to new highs, looking good. FedEx is on its way. Look at that gap up. Any kind of pullback here would be a buying opportunity for me here, but that looks good. Tesla continuing down. So first one we really get to where it's continuing to head lower. There are buyers, so keep, if you, let's say you're a Tesla bear and you're like, yes, this is kind of tanking now. And then you wonder why it sort of props up a bit. You have to understand that there are also institutions that are trying to remain neutral. They're not bullish or bearish. As far as they are concerned, the fundamentals might tick enough boxes that as far as they're concerned, so they might just be buying. So you're going to get sporadic buying as it drops anyway. It's not indicative of a change in the level of the brand or anything necessarily. But the selling, my point is that the selling pressure right now is still in control. Therefore, I did note here that there was some bullish divergence, and therefore we might see a bit of a change. I'm going to leave that out for this yet because the price action is not following through with producing more and more bullish signals. So right now it does appear, I don't know why I'm stumbling on my words, it does appear as though the sellers are still very much in control. Thank God. Beautiful, beautiful, beautiful. Ladies and gentlemen, like when you tell people, you should say, listen, you want to focus on the best trends. This is insanely good. If you say to someone who has only ever traded Forex their entire lives and then you show them this, I want you to understand why stock traders, why there's still a market to day trade or trade stocks and make a lot of money. The trends are absolutely insane and they can go on for way longer than you would get with currency markets as well. So just, this is it. These types of trends are not unique. There's tons of them and they provide lots of money-making opportunities. So you could forget about currencies and just trade stocks for a while and watch your account grow. And trading stocks, there's gapping. So you do need to take the gapping into account. Okay, that's a characteristic difference. Okay, what do I have to say about Walt Disney? It looks fine. It's just breaking out of this range to this level at 112 in terms of resistance. Nice consolidation breakout. Looks pretty good, guys. So for the most part, my expectation is I'm going to get rid of this. There was some bearish divergence, and all we did was we subsequently had a consolidation and a breakout. Remember, that's how we can get through that divergence. We don't need this anymore. That looks really good. Disney looking really nice. Okay, let's have a look at bonds. Okay, bonds are trying to turn around. There's no doubt in my mind they are trying to turn around. We've got a double bottom here. We're going to see, should see. Where's my downward sloping trend line? This is what I'm looking for. We should see a shift of this, a break through that soon. Okay, Eurobonds looking more bullish, relatively speaking. Solid double bottom there. We've broken through this. I'm going to show you that it will show you where trend lines are very powerful. I'm going to update it here. We've already broken through it, so I'm going to update it again. Okay, and then we'll see if we break through it again. But there's just now what's happening is just less bearish resistance. It's looking very, very good. And I think, again, there's another bullish candle there. So we can even move that over there. We're getting a lot of bullish signals over there. And yeah, all looks very, very nice. Okay, all looks really good. So that's good. Let's look at cryptos. Cryptos are having a bit of a consolidation moment. Makes sense. You had a big weekly move. We're trying to retrace, but there's still lots of buyers in the market. So this happens. Sometimes you get a lot of buyers in the market and bulls, and anytime there's a pullback, it buys again. But it still hasn't had enough of a correction, and so it stumbles along. It either stays where it is, and eventually what happens, some people will exit those positions, and then maybe it either consolidates and then it just keeps going. So in other words, if the overall volume of buyers is just so strong, eventually it'll just break through and just keep going to the upside. Or eventually it capitulates and then has a deeper correction, and then it's fine. So you get a lot of these wicks here, but what I'm saying here is if in the near future we're going to see a touch on 60,000, a solid move down, or even a little bit further, we're not there yet. Okay, but they're looking nice and bullish. Ethereum looking really good. Ethereum looks as though it's trying to put in a higher low, which means that this could be a potential buying opportunity. We'll see. Again, entry above the high where it is now, and stop loss below the low here or here. We'll see if that's going to be the case. That weekly, any kind of bullish candle here is a good sign as well. Solana, you see, I look at the weekly and immediately I see, and it's an attempt to retrace or consolidate. And so it's nowhere near the moving averages. So same kind of thing. So we could be forming a little bit of an ascending, descending triangle, or just a pennant. And then we're going to have to see how it responds to that, where it's just forming itself into a wedge. Here, on the other hand, Cardano, any bullish candle here would be a buying opportunity because it has done a nice, decent retracement. And Binance looking good. You see here, whereas Binance wants to keep going. And it's done really, really well from this one. It's sitting at all-time highs. So I think with cryptos, if we've seen them going sideways this week and not really going anywhere, they haven't retraced, but they're not going up either higher, then that is the explanation. They've had a really good run, and there's just not enough buyers to take them over the line to keep going. That's a possibility. I'm not saying that's going to be the case this week. I'm saying that it is a definite possibility this week, and if it does happen, there's an explanation as to why that is the case. So there we go. In summary, ladies and gentlemen, I think there's some really good opportunities in the currency markets, absolutely. Indices are looking good, overall looking really good as well, especially non-US indices. If you're looking at bullish setups there, they look amazing. Individual equities are looking incredibly healthy as well. And then we've got bonds are starting to look more bullish. Commodities, gold overall, I spoke about those. Crude oil's looking nice and bullish, and cryptos are also looking like they're either going to consolidate potentially this week or continue higher. But in principle, again, there's so much bullishness overall. It's very good. There's a nice optimistic tone, as there should be, with sensible risk management, of course. I'm going to leave you with that. Thank you, ladies and gentlemen, and it's good to be back.